Hello and welcome to the Closing Beat, everybody. Happy Monday to you. My name is Dustin Tibbetts, financial advisor here at Jazz Wealth, and you probably still hear it. I've been a little bit in and out with the sickness. It was either Haley that got me sick or Kevin. No one wants to take the blame for it, but they got me. So I've been down, sleeping and, odd hours and hot and all this stuff. But I'm better now. I feel good, at least, and hopefully I don't sound too bad. We are financial advisors here at Jazz Wealth for people who don't think they can have financial advisors, right? Just for the average person. Go check us out there. We also have, I believe, the highest yielding savings account of all of them, thanks to Goldman Sachs, 5.25%. It even has the app now if you want to use an app for that. We do wine and wealth classes, sort of fun on Thursday nights. And we've talked about your March financial focus. Last week, we talked about Roth conversions from top to bottom, like how do you handle the actual process, the tax portion of it, and the reporting part of it. So, because it's tax time, right? You guys are out there trying to do your taxes going, hey, wait a minute, what do I put here? A little bit of help for that. All right, let's take a look and dive into the markets here this week because it's going to be an active one if you haven't been able to tell that already. We have the March Federal Reserve meeting coming up here on Wednesday. There is literally no chance of a cut. I shouldn't say that. There is a 1% chance of a cut, right? So if you look at the actual betting odds currently in the futures market, you find there's a 1% chance of rates going down a quarter point. There's a 99% chance that the rates will stay the same. It's 100%. They're not going to change it, right? It's just what it's going to be there. By the way, I want to point out that you start thinking about it like March, okay, April, there's really no chance, right? Or May, you go into June. In June, there's only a 50% chance of a rate cut. In other words, everybody's moved out to June now. So we're now talking second half of the year for these rate cuts here. And this week, it won't be a non-event, right? We'll still have the Fed make their decision. They'll say no rate cuts and everything. And everybody's going to look at something called the dot plot. The actual term for it is the summary of economic projections. Right? So if you want to look it up, it looks like a bunch of dots, and that's basically the adjustments that every Fed member has made. So it's taking all of their beliefs into one, not just looking at the Fed as a whole. What did they decide? No rate cut. It's looking at everybody, and you can kind of see the shift. Like if people are starting to believe in the Fed, voting members, if they're starting to believe that, yeah, it's probably June now, maybe beyond that, you can kind of see that Rorschach test. If you blur your eyes, you can see the difference between one and the other there. Now, we're okay with 3 cuts, right? We've all accepted. The market seems to be cool with that. We're okay with 3 cuts there. But any shift in the summary of economic projections, or the dot plot, if you want to sound cool, is any shift towards less rate cuts there. I don't know what the market's going to do there. I think that'll be kind of interesting. So it will be an active week. There'll be a lot going on there. Let's take a look at the S&P as we get started here. So we're in this little tight uptrend here. We had 2 weeks in a row worth of losses. We only lost, 0.1% last week. These are not big losses week over week, as you can tell by looking at the chart. I mean, it doesn't even look like it went down there. So nonetheless, you've got that going on there. Now, I want to point something out. Every week I write a letter. I call it the Notes from Jazz, right? And you could see the archives if you're one of our clients there. But I love writing this letter because it gives me a chance to point out statistically what's going on. Instead of saying, I'm in a bad mood, I'm not feeling good, and therefore I don't think the market should go higher. I don't like that, right? I have my own beliefs, but I like to share the stats there. And we got to really... There's a bunch of interesting things that I just went on a tear, and I just put all this stuff in there. I'll share one of them here with you. How long has it been since the market's fallen, 2% in a day? That's a big down day, by the way. How long has that been? Do you know that since last November, nothing? We've yet to have a 2% drop in one day. In other words, meaning you can give us the worst news you can think of, and it wasn't enough to cause the market to drop. If we take a look over here, here's the history of that. After today, it'd actually be 269 days since we've seen a 2% drop in the market overall. It's not horribly odd. As you could tell, there's other moments in time where we've had longer stretches between 2% drops. But look at the dates. I'm going back to World War II, right, the end of it. If we look at the dates in here, how many times have we gone some extended period of time without a 2% drop. Just that one other time, right? So this is a bit odd if you look back 15, 20 years or so. We got two different events in there, long stretches. So I don't know, guys. You know, you get that, like, you know what I mean? Like you're picking up pennies in front of a steamroller. You're pretty much getting away with it, but you're not allowed to sleep. You just keep picking them up, right? Eventually you're going to trip or something's going to happen there. So we'll see. Really crazy there. Not only that, 269 days since a 2% drop. Check this out. Since here, this low after our pullback last year, since this low, there has yet to be even a 2% drop. So November, December, January, February, March, we're going on 5 months now without even so much as a 2% drop. Okay. So I point that out today and I spend a tiny bit more time on it because remember, markets do go down. And when they go down, it's kind of like they use the saying, the bulls take the stairs and the bears take the elevators. So the bulls can just stair step their way up nice and calm, but the bears take the elevator because it's faster to the downside. So when you see that, I'm not suggesting it's tomorrow or anything, but when you see that, remember that that's okay. That the markets do that. It's just they haven't done it in a while, and so we're lulled into this calmness, right? Like when you're in a car and you fall asleep, right? You're nice and calm. Someone slams on the brake, you wake up. It's probably not a big deal. They're just slowing down. But you think your life is over, right? Anybody? Does that happen to anybody? Okay, let's take a little bit further here. Now, areas of the market are pulling back. Not a lot, right? But they're pulling back. We had, remember, every sector in the market besides utilities was overbought as of the beginning of last week. Well, after having a little pullback here, we now have real estate out of the overbought territory. So just your pullback areas. That's all I'm pointing out. Consumer discretionary. Hey, there you go. I don't know that it's, where you want to buy it, but you're starting to get it to pull back. Tech, slowly and very patient. Look, it's rounding, starting to get this rounding movement in the price action. It's a really silly way to look at it, but hey, when you get that, what do we mean? What does that happen, or what does that mean? Less buyers. The sellers are slowly winning. Not a lot, they're just winning a little bit day by day, and so the price rounds itself over there. So tech moving out of overbought territory. And then the last one, there are 4 sectors. This one would be healthcare, right? Same rounding, sort of pausing uptrend pattern here. And so you got a little bit of a pullback there. It's good, right? Tech lost almost 1% last week. That puts tech in now in 5th place year to date. So it's not the leader. It's not the number 1 sector that's out there right now, and that's okay. While you're out there chasing AI, and all the stuff that AI has to do with, who's the leader year to date? It's energy. They're the lead. Now, they're not beating some of the performance of these other AI stocks, but I just want to point that out. Energy and basic materials would be your most overbought sectors. So we just kind of looked at both sides there, give you somewhere to hone in on there, right? Let's go through everything else here. So you got the Dow, right? Same thing, a little bit of a rounding. The NASDAQ, even more impressive. I put that in our notes from Jazz, just kind of showing the tight uptrend, and then notice, it might be early, but a little something there. I don't know. We'll see. You've got, there we go. You got oil. There you go. Breaking more comfortably out of that high. I sort of thought about it for a little bit. Now we've got a more consistent uptrend going on there. Bond prices moving lower. That was something that was pretty much a theme last week. That means your interest rates moving higher. And that's all going back to what? The inflation numbers, right? The big fear now is that we have a more pronounced increase in inflation. Oh, okay. Well, what would that mean? That would mean rates would go higher, right? So we would be raising rates instead of cutting. So just like a whisper of that information in the markets right now. Other than that, I'll point out gold, right? It's pretty much taking a break after that big rally there. And then the Russell 2000 also taking a break after its rally as well. All right, I want to point out one thing here, and then we'll get into stocks in the news because I've often commented, joked, complained that really there are 10 stocks. We say Magnificent 7, but there are 10 stocks that control a lot of what the market does by their size, just because of their size. It's not a conspiracy. It's the way the S&P is actually calculated. And so now we find ourselves in this really weird spot here. The 10 largest companies in the S&P 500 now make up 34.4% of the S&P. The rest of the overall earnings of these companies, right, growing obviously at a similar pace here. So they the rally is warranted. I'm not saying this is wrong, but I do want to point out this is the largest spread that we've ever seen in that context. That's not cool, right? We like a nice earnings growth, the big earnings growth companies there. We like to see them doing well, and of course, they'll of course take up more of the S&P. But we don't want to see it too fast. That's what happens like with NVIDIA. NVIDIA goes too far too fast. We get overexcited. Doesn't mean NVIDIA's bad. Just means temporarily you guys got a little bit carried away. So I wanted to point that one out there. Let's move on. Stocks in the news. Okay. I'm going to do this for you. And then if you have any questions, let me know. Take your questions. If not, I'll be on my way. SMCI, not really in the news, but more for its move here being in the news. It gets added to the S&P today. Today's the day, right? So I shared with you last week, and I've also shared it with clients, the what happens to stocks before they get into the S&P, and then what's the performance after they get in the S&P. This is an exaggeration of that, but I think you can guess what I'm talking about. Personally, I love to see this sort of thing. Can I tell you that me, Eric, Chris, Haley, we said we're going to go work from remote. So we went to the beach and we set up and we just did a little field trip for the team. And we were all talking business, doing our work. And this guy was sitting behind us. And when we got up, he goes, "Hey, can I ask you guys a question? What do you guys do? Some kind of finance or something?" And I said, yeah, that's what we do. And he goes, "Can I ask you about SMCI?" I'm not joking. Eric, actually, I told Eric, I'm like, "Chime in, bud. Here's your guy," right? He had bought it and chased it at a 4-digit price. I don't know how he's doing today, right? I love seeing things like this because it reminds you, it reminds other people why we don't chase stocks. The other one. What's the other one? MicroStrategy. I'm not saying that these are bad stocks. I'm saying at $1,700, who in their right mind, would be buying that stock. This is great, right? Let it pull back. Let it relax a little bit. Then get excited about the stock. But, whoo, holy cow. Craziness going on over there. Hey, Adobe, yet another example, or should I say confirmation, that we are in a late cycle economy. I've shared this with you guys in the past. There's different ways to be able to see that. The easiest one is when public companies return stock to shareholders, or return cash to shareholders. When that happens, shareholders react positively to it. It's not, again, it's not like an opinion or anything. It's obvious. It's what we're seeing there. So you look at something like Adobe, and they said the same thing. They're like, "Hey, we're going to go ahead and buy back a bunch more shares here. That's just what we're going to do." Yeah, there you go. Oh, Steel Dynamics is another one. Now, this is not new news, but Steel Dynamics, same thing. They're going to raise their dividend. They're going to double it. So they're going to double their dividend. Hey, we're returning cash to shareholders. That's pretty cool. Boeing was in the news. What was this one here? The Boeing and the FAA. They're going to be talking a bit here for a while. So, hey, this 737 MAX issue is probably going to take us about a year to maybe fix that thing there. So that's what that is. Anyways, that's basically all I've got there. What else do we have? Yeah, it's pretty much, I guess, all we'd want to. Yeah, you talk about the Google and the Alphabet and the Apple thing. You know, they're working together. We got to do the what do we call it? The winner.
We got our winner today, and it's another client. We're off to a hot start here with clients as a whole doing well.
That's mine.
Nathan L.
That's mine.
Don't think it is. I don't think it is.
I think I'm thinking Nathan H.
You are thinking Nathan. Yeah. Nathan L is Eric's. So
come on,
Eric's on the board there. Yeah. But we're happy. But in general, we're happy. Congrats to them. So yeah, that's your winner for Guess the Dough.
Yeah, congratulations, Nathan. What do you do? Go with the credit?
Yeah, we're gonna credit his account.
All right. Well, that's what it is there. I'll take your questions if you have any questions. In the meantime, if you want to learn the basics of finance, be sure to check out Haley's channel. She has her own channel on YouTube, and of course, she's focused on that short, quick snippets to teach you guys how it all works, just the basics, right? So maybe the kids, share it with your family, hit the subscribe button, all that good stuff. I hear we've got one more cold front coming.
Yeah, it's going to get a little chilly. It was supposed to rain all day today. It did not. Talking to me.
But tomorrow?
Yeah. It's going to be chilly, like 60,
really?
63, 64. Whew.
Okay. I've been waiting for I figure we got one last cold front because I need to get in my attic.
Yeah.
I got some work to do up there.
Oh, okay. Yeah.
So
Perfect week for it.
Tomorrow night. Okay. Yeah, I love it. Joanne Fabrics, my daughter hates that store because when she was younger, my wife would, hey, come with me, let's go. And they'd go to Joann's and she's like, this store is the worst store on the planet. So she saw that today and like ear to ear, man, just a big old grin. Sorry about that, Joanne. You know, she just didn't care for your store. Yeah. Tom says, all right, we got this SoFi thing here. Look at these big tails. I wouldn't call them big, but I would say they are little bitty tails, right? Remember, how do you say it? Don't get wrapped up in, we used to do this when I was teaching the Chinese trading and stuff. When you call something a tail, it's relative to itself or to the stock, right? So for SoFi, to call that a big tail is not very interesting relative to what SoFi can do. It may be interesting compared to like what Ford can do. Like if Ford did that, you go, but that's a big tail. That's a reversal day. Something's going on. Not so interesting for these guys. It is obviously a stock that could trade in a larger range there. So there may be something working. I wouldn't be surprised if it's a little bit of a fake out for all the technical traders that want to wait for this nice little guy right down here. Just my 2 cents there. Hey, Kaylin says, for the market cycle, does rebound, expansion, slowdown, recession happen in order? Or can we go from slowdown back to expansion? Yeah, you absolutely can. You definitely can. You can have a slowdown and a pause, right? There does not need to be a recession in there. And as I'm talking, I'm never going to find it. There are just a handful of examples of that. And I may have to put that on my list for you for tomorrow. At some point, we did that. We actually went through each economic cycle as defined by the NERBR, not by us. And so it is possible. It's an economics class type basic thing to look at. But yes, short answer. I'm 100 slides in. I'll have to look for it for you. Yeah. Tom says, hey, Dustin, you think the Fed will be hawkish on Wednesday with the hot inflation data? I don't think they're going to change a thing. I think based on Powell's testimony, right, which I guess was before the inflation, that might not be the best answer. But I honestly don't think they change a thing comment-wise. They may change some stuff about future rate cuts, and they might likely say, hey, it's still too soon. We're not going to do it. Remember that the Fed only responds to events by cutting rates. They don't cut rates because they feel like it. I think the dog wants in, man. He's like beating the door down. That's cool. Yeah. All right. I'm going to wrap it up there and get back to work, do what I need to do. And the puppy's here. He's happy. Happy to be back. All right, you guys enjoy the rest of your, what are we showing here at the end of the show? Is it Eric's thing? All right. So we're campaigning for clients here at Jazz, and I had my little hit piece on Eric, and now apparently he's got his on me. None of it's true. Whatever he says is not true.
Dustin Tibbetts is not a real leader in finance. A real leader in finance would never swear on a live show. Dustin Tibbetts definitely has.
F***ing is down 67% in the United States. In the U.S., almost nobody is f***ing anymore. Isn't that incredible?
A real man in finance doesn't need a step stool for the closing beat. Dustin Tibbetts definitely does. Eric W. Powell is a real leader in finance. Eric Powell, a leader with a servant's heart, having served his community as a firefighter for many years. Eric W. Powell doesn't need a step stool to record his videos. Eric W. Powell, a family man who loves a dad joke and would never have to be censored on his own channel. A vote for Eric is a vote for decency.